The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 26th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way for us to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon, 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfn.com, just as John in Walnut Creek has done just a few minutes ago. Of course, inside the Tiger's Den, go ahead and ping me. And any other method that you want to go ahead and get in touch with me, that works for me. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 131 points. She's trading out at 18,130. S&P is down 14 points, trading at 2150. NASDAQ Composite is off 40. She's trading out at 5265. Russell 2000 down 7.5 points, trading at 1247. The DAX closed off 233 points. The FTSE down 91. Gold is up $2, no big deal. Silver's down 21 cents, no big deal. Light sweet crude up $1.52. Maybe a big deal. It's trading out at $46. Even Steven, you got to like that. Lead the charge here to the upside. You've got GW Pharma, that's up $16. AutoZone, that's up $11, 1.5%. Chem Tora Corp, that's up 15%. Cavco Industries up $3, 3.5%. Transdigm, I like saying Transdigm. I don't even know what it is, but it's up $3. It's up a little over 1%. To the downside, of course, dollar-wise, it's typically going to be a price line, $1,400 stock. It's off $13. That's about 1%. Google is down $12, about 1.5%. Acacia Communications down $11. That is off 9. Regenerant Pharmaceuticals off 2%. That's down about $9 as well. Let's go to the first question that came in from John in Walnut Creek, California. John, thanks for sending in the email question. And his question says the following. It says, Steve, can you discuss on your show today if the formations on some of the indexes and ETFs are island tops? Well, absolutely they are. And so if we take a look, let's start here with, we'll take a look at two because I mentioned these inside the Tiger's Den earlier. So if we take a look at, and happy Monday to you, Jay, inside the Tiger's Den. If we take a look at the NASDAQ Composite, let's just start here. Ticker symbol CUMPQ. What we can see is the island. Now, this is perhaps the most important island top. Well, it's and I'll qualify that, and you'll understand the qualifications, but perhaps the most important island top formation because it's at all-time highs, right? If we put this on a monthly basis out here, put on a quarterly basis, that'll make it easy. You'll see we're at all-time highs out here. So, that's a chart going back to the 1970s. Now let's go back to the daily chart out here. And whoops, not DE. DE is not a time frame yet. We can go ahead and turn it into a time frame. I don't know what it would be, the John Deere time frame, I believe. But if we take a look at what the NASDAQ Composite did just a couple trading sessions ago, September 22nd, gapped up. So that gap from the trading day earlier, November 21st, what I do in taking a look at gaps, John, is I take a look at the actual high, in this case here of the preceding section, September 21st. And as long as the next day we don't see any price hit the high of the previous day, you've got a gap to the upside. also known as a rising window, if we were going to speak Japanese candlestick lingo out here. So either one basically is the same thing. Then the following day, this is Friday, we had a little bit of a pullback, but the low of Friday, which was 53.01 and change, never hit the high of that day on September 21st, which was 52.99. Therefore, we have still a little gap. And today's gap down below Friday's low creates that island top. Now, interestingly enough, if we center our eyes towards the left-hand side of my chart, you're going to see that on the trading session here, well, you're going to go back to the low of June 24th, 46.98, and then the high of June 28th, 46.92. You're going to see that in the NASDAQ composite, we have both an island bottom, that's what formed there, and now we have an island top. Now, speaking of islands, Mon, there was actually a previous island top inside the NASDAQ composite, and that formed over the trading session of September 2nd, September 6th, September 7th, September 8th. That created the island when we saw that September 9th gap to the downside. That gap, too, was at all-time highs. That gap didn't seem to mean diddly out here, and I'm referring to Bo diddly when I say diddly out here. And typically, there is nothing more bullish than a failed bearish pattern, and that, in essence, is what we had. But we have to respect, we don't have to, but we're going to respect the possible island top inside the NASDAQ composite. Now, John, to answer the question that you didn't ask, and we'll go take a look at the ETFs. Let's do that here. But to answer the question before we even get to it is, does this have meaning? Well, it could. It could. Here's what, and we'll take a look at the IWM. Here's the Russell 2000. You can see the Russell 2000 also forming an island top. Now, if I put this chart out here, the ETF, on a monthly basis, you're going to see what? We're not at all-time highs. Do we have to be at all-time highs? The answer is no, we don't have to be at all-time highs. Just simply this pattern can form at highs as well as at lows, just as the IWM did down here. But see, the IWM, the NASDAQ composite, they're all really catching up to the futures markets. So the question that you would have asked is, how important are these? And I will say the pattern itself, an island top and an island bottom, is not to be ignored. But where they are really important is in individual equities, where there is no underlying instrument, because it, in fact, is the instrument. So when you see an island top in Apple, or you see an island bottom in Apple, an individual stock, or Facebook, or Google, or Microsoft, or Disney, or whatever it might be, those are the ones that have meaning. And what does that mean? That means we should go through the 3,000 stocks inside the NASDAQ composite. Because if you're really looking for equities that have given short signal, we know it's coming from that basket. And you just have to have those 3,000 equities to go through one at a time, or have some type of system, some type of automated system that can help you to identify where those, where those gaps to the upside and gaps to the downside have come into play over the last 4 trading sessions, to figure out which equities are they that you should really be taking a look at. There has got to be a basket, a handful of them that are in there. Now, that doesn't mean that they do not have meaning. Back to the NASDAQ composite. I pointed this out earlier. Although we didn't actually view it. I said the most important island top that formed inside the NASDAQ composite was, we'll have to get to after this break. But I'll give you a hint. It rhymes with Shmady Mevin, or I guess it could be 87. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, most people can remember where they were on Black Monday back in 1987, even though it seems like forever ago. And if we go back to that period of time, the NASDAQ Composite was also at its all-time highs. Now, it hit the previous all-time highs about a couple of weeks before the actual crash out there. The actual high, let me see, I think it came in on August 27th. That high back then was 455. Was that it? No, 456. I take that back. September 1st. So we're talking about this is why they say, September, October, it's a scary time of year. Well, scary because when you go back to 1987, what the NASDAQ Composite did, what it did was it formed an island top. Now, it was subtle, but nonetheless, it was an island top. Now, in this case here, there was a gap to the upside between September 30th and October 1st. Small little gap. And then 4 or 5 day trading sessions later on October 7th. So it was well before the October 13th Black Monday day, we saw a gap to the downside. But right here, right where I draw this little rectangular square, that is your island top at all-time highs inside the NASDAQ Composite. Are we going to see the same thing? I don't. Am I prognosticating that? Heck no, I'm not. I'm just showing you an interesting pattern, what I consider to be one of the more, if you and I were going to write a book, we would not leave this one with regard to island tops out of it. And then if we were writing a book today, we especially would not go ahead and leave this pattern out. So back to John's question, in essence, to summarize, we do not ignore these. One thing is for sure. Is the pattern today bullish or bearish? It is certainly not bullish out there. Now, you take out these highs, and that is a bullish message. Remember, we're looking at daily charts out here. But again, back to my premise is that island tops have a heck of a lot more meaning in the individual stocks than they do inside of indices or ETFs, which are really just keeping or catching up to what went on in the futures marketplace out there. If we saw an island top inside of the futures marketplace, then that would be a whole different scenario. We don't have that out here. Doesn't mean we ignore it, but I just want to make sure that I can thoroughly answer my opinion about what island tops and island bottoms mean. Now, what does that mean inside the NQ or the NASDAQ Composite at this stage? Let's say that it does take hold. It says we're in a consolidation. We're in a consolidation between the island bottom from back in June to the island top out here that took place this morning. That's how I would read things. And that would be we're in a consolidation if price ever closes below that September 12th low out there. That's 50.97.80. We're not anywhere near that as we speak right now. So that takes care of John's question. I don't see any others. So let's go take a look at what's going on. Now, there's no good news for the bulls out here. Well, if I were going to, how can I really say that? I can always find good news somewhere, right? And we can always reframe it. But AG is the one, he is on the money right there. If I could give a prize, he would actually get it. He knew what I was going to say. How did you do that? How did you know what I was going to say was, well, there's at least one thing that would be good for the bulls. Now, there's a guy that can actually read your mind. He was reading my mind, because if I was going to say there is one good thing that the bulls could find out here, well, it would be the mere fact, it'd be right here. It'd be this chart. Right now, we have the VIX index up 15.38%. That's what panel number 2 on this chart shows us. So behind door number 2 is a one-day rate of change, as we speak, of 122, that is above 10%. Now, I'm gonna go ahead and sway from which never turns into a good golf shot. If you are a golfer, don't sway. Keep your body really pretty still. You can lift your foot just, but keep your body still. Swaying always turns into a shank, not a lamb shank, but a shank where the ball goes to the right, to the left. It goes somewhere that you're not really focused on. So I'm gonna maybe sway here, because normally what I would say is that when you have a one-day rate of change greater than 10%, odds favor, and they do favor, that within 48 hours that you will see a bounce. And that's what I would go with in today's meaning. That doesn't mean that it can't happen tomorrow, because we're still in the trend is your friend. We're still in a rising price channel, let alone we're still in a rising trend. We're looking at the S&P 500, by the way. That's the top portion of my chart out here. However, oftentimes it doesn't really happen the next day and is the day following. So here's the caveat, because most people, I heard Tom went out and actually bought popcorn. I got to ask him about what was it, Orville Redenbacher popcorn, or was it can't be already popcorn, although it must be, because he said he bought some popcorn that had chocolate on it, chocolate popcorn. Well, it must be pretty good, actually, out there. But in any event, he bought that to go ahead and watch the food fight. Maybe he was going to partake in a food fight tonight. At least that's what many people think is going to occur during the debate. So here's the qualification. Here it is. This is how I would play it, AG, and this is how I would qualify it with regard to assume that the market ends like this, or even worse than this today, which is more likely than not, but with a one-day rate of change greater than 10%. And let's say, I'm going to give you two scenarios, because you can watch with Tom, with me, with others out there. You can throw your food at don't throw your food at the television screen. Eat the food, for goodness sakes. And let's say that Hillary Clinton does a spectacular job, or basically she doesn't blow it. Either one out there, but somehow she walks away as not the loser of debate number 1. If that's the case, the VIX one-day rate of change 10%, you should anticipate that you will see the market bounce tomorrow morning. You'll probably see it start bouncing by about, it could be Asia time, but I don't know. That's 9 o'clock, probably not likely, but certainly maybe by 3 o'clock in the morning, 3:30, as Europe comes on board. That's if she does really well. If, on the other hand, she has one of those, like she's walking to the van and decides to collapse, only there's some net there. Maybe there's some strings that prop her up, pull her up. Let's say she falls flat on her face. You know what I was actually going to say out there. Or just simply that the Trumpmeister, plays pretty good instrumental music out there. Let's say he does well, for whatever the reason is. Then I will say that this one-day rate of change, you can forget about it actually seeing a bounce tomorrow. It won't happen for at least another couple of days. And we could see price pull back to the bottom of that rising price channel out there. Now, that is not my opinion. That information, quite frankly, is something that I'm calling from the charts out here. So that's how I would see it playing out in the market. So one-day rate of change says we're going to see a bounce within 48 hours. Will it be tomorrow? It will be tomorrow if the Clintonmeister is able to do a good job. And if it's the Trumpmeister that does a good job, it ain't happening come tomorrow morning. Prices will continue to go lower. So we'll use those as the bailiwicks, whatever bailiwick means. We'll go ahead and use those as our, as our interpretation of what the market is actually going to go ahead and do. Now, let's go over and take a look at short term. I'd like to do that with you, but we're going to have to go pay for some of this, we've got to pay for the light bulbs, although right now I do not have lights on. I do the show in the dark. Now, that's not a surprise to most of you. Most of you have been saying for years, this guy does the show in the dark. That's true. Dow's off 150, S&P's down 16. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so let's go take a look at a couple other indicators, understand the message that they are providing to you and I. Let's go take a look at the advanced decline oscillator readings. That's the bottom portion of my chart out here for the New York Stock Exchange, left-hand panel. Panel next to that, NASDAQ Composite. We already know that that's given us a bearish message with that island top out there. And then next to that is the Dow. You'll see that the bottom blue-lined oscillators out there are all below their green line. Their green line representing the zero level. Now, what I want you to just take notice of on all three, because you can see this in HD, so that becomes very easy. You can see these charts as clear as day, or something like that. As clear as a bell. Where does that come from? As clear as a bell. It doesn't even make sense that you could see something as clear as a bell. But maybe I just made that up. I don't know. But I think that's a phrase that comes from somewhere out here. But here's what I want you to see: as clear as a bell. If you can take a look at see how when we got above zero, this was a courtesy of the Federal Reserve, or how the market responded to Janet Yellen last Wednesday, went ahead and moved from the lows out here below zero to above zero. But notice when we were below zero, see all the zigging and the zagging that was going on down there? I'm looking at the lower left here. I'll just blow this up. That way you're following along with me. New York Stock Exchange right now that we're taking a look at. See how and we've been down, not we, but that advanced decline oscillator had been down below zero since about July 27th or so. We saw a move above it. It was like one zig, one zag. And when you do that and you don't make any of these little, bumps along the way, it's what's really referred to as a simple structure. Obviously simple because there's no zigging and zagging. It's a boom up and a boom down, right? And when we take a look at it, what it really tells us is that when that occurs, in the simple structure of the advanced decline oscillator, it tells us that it was really the complex side. That's the bottom side where we had the zig and zagging, right? One side's got to be simple. If one person in your life is simple, the next person's got to be complex, right? Otherwise, the magnet doesn't attract out here. Same way when it comes to stock market analysis. And so what this says, it was always inside the New York Stock Exchange, even with the move higher, inside of after the Fed's the way the market responded after the Fed release and the conference that they had out there, it says that now it was always inside the New York Stock Exchange. It was never the bulls, the buyers, that actually had control. Now that's assuming that we get a closing below that level. If we don't get a closing below that level, we could get some zigging and zagging. That would have a different message. But I'm going to give you the message as of 1:33 p.m. because it's a uniform message between the New York Stock Exchange, the NASDAQ Composite, and the Dow. Why is that important? Well, in the case of the Dow, it's got some troubles out here. It is actually the weak link in the marketplace. Let me see. We've got a nice little rising price channel that is now failing. It is flailing out here. And if this is going to head lower, then you don't even have to go vote, because I can tell you who is going to become the next president. Whether you like it or not, it has nothing to do with my vote. It is the vote of the stock market. So for those of you that are bears out there, just make sure that you have your political alignments aligned. Otherwise, you might want to consider maybe not being so bearish, if you know what I mean. And what do I mean? Here is the way that the stock market will play out depending upon who is going to become the next president of the United States. If you are bearish, and I mean you think, hey, Steve, you know that island top that you saw that just formed here today? And thank you for telling me about the one that preceded the 1987 Black Monday. We'll just wait for next Monday, because this Monday, today can't be Black Monday out here. But we'll just wait for that. If you are believing that the market is going to head lower, then you also believe in your heart of hearts, in your mind of minds, that it's Donald Trump that's going to actually win the election out here. Because if this stock market goes lower now, and if ever there was an opportunity, if ever there were messages inside the stock market that it's ready to head lower for a period of time, you might say, how long? And I will say for a period of time, weeks. We're talking weeks, okay? Then I can tell you that odds, right? I can only give you odds, but they're pretty darn good odds that somehow, some way, that guy is going to go ahead and win. On the other hand, if the market trades higher, trades sideways, we could trade sideways for the next couple of weeks, and then decides to move higher into the middle of October, third week in October out there, he doesn't have a chance. Not a chance in smithereens out there. So that's the way the markets are set up. It has nothing to do with, and I'm not voting for either of those two people out there, to be quite candid. So it becomes very easy for me to talk about both of them. They don't represent, I'm not going to make this political, but those two people do not at all represent those things that I stand for goodness sake. So why would I won't say that. Well, I will. Why would I vote for either of those two? It just defies logic out there. In any event, that's besides the point. We're really talking about the stock market out here. So let's go see. So as we speak right now today, nothing looks good for the bulls other than that VIX index. And we covered that during segment number 2, I believe it was. I think it was segment number 2. Now, with regard to short-term chart patterns out here, well, where's the market going to head to? Where is price likely to head to? And if we go take a look at the daily futures contracts out here, the real next key level is down just about 5 points from where we're trading inside the ES Mini. Well, you got 2138 in essence is where we are trading right now inside the ES Mini. At 2133.50, what we have is the weekly TAS market profile low. If you close below 2133, let me just, and we're going to call it actually 2132.25, right? We're going to go ahead and combine parity. And you might say, what did you just say? I said parity. Parity. No, I'm not talking about going to a tree and taking down a pear, although this would be the time of the year, would it not? I think September, October is the time when you want to start picking pears from a tree. And there's nothing like a good old Bartlett pear or some other kind of pear out there. But the type of pear, a G, that you and I are talking about happens to be the lunar phase where the moon is closest to the Earth, which took place last week. Might have been Wednesday, could have been Thursday. I don't recall the exact day. The exact day actually is September 18th. So whatever day September 18th was. And 2132.25 is perhaps one of the most important prices for us to pay attention to inside of the ES Mini. It could find support right there. But if it doesn't find support, then we're going to see price head down to the 2123 level. But we'll just simply go back to our market profiles and say it is not out of the question to see a price move, and quick price move, by the way, down to the 2108 level. So that is what our market profile information is providing to us. Now, I will tell you, as bad as it looks out there, and not that it really looks that bad, you're down 159 points. Not a big deal. What do you mean not a big deal? If you take a look at the S&P 500 as an example, we're not even back to Fed celebration day, back on the trading session of September 21st. So, we kind of have done, the market has kind of done a whole lot of nothing out here, and it's pushing lower with less energy. At least it has been during the morning out here. Now, if we take a look at the pattern that should have held, that likely is not to hold, it's this one here. 30-minute chart. Seventh wave move to the downside, which, by the way, there was a seventh wave move to the upside that called the top out here. It could call the bottom, but it looks like we're getting really close to taking that out. Price has been moving lower, doing less relative energy out here, but I don't know. Doesn't look like it's happening, man. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 155 right now. S&P is down 17. A couple requests that have come in during the breakout there. One was to, says, Steve, can I look at JDST in at 1978? So, yeah, let's go take a look at JDST out here. And then we're going to go take a look at the GDX as well, because that's going to perhaps provide us with better information out here. But you never know. But let's just take a look at JDST and assist this Tiger or Tigress, I don't know which it is, out here with market profiles. Let's go see where we're at with regard to JDST. Let's also go ahead and see where we're at with regard to volume inside of this ETF. Now, what this shows us right now, it's trading out at a price point of 22.73. One of the areas that you're going to watch with regard to this bounce is you're going to watch 24.82. Now, this had a little gap to the downside on September 21st, about 7 million shares to the downside. Today, you're kind of up into that level with light volume. None to say. We're right now, you're about 50% of that volume. So you're moving into a downdrafty type area with light volume. Nonetheless, watch the price point of 24.82. If JDST can clear 24.82, it suggests that you can go up towards that gap, or we'll take a look at it being the top of the TAS a weekly box of 30.99. That is the message out here. So JDST says this is the Direction Daily Junior Gold Miner. This is the bear position out here. Here, when I take a look at the GDX, now put this chart up on my screen, here is the second thing. In order for that trade to really work out, inside the GDX, you need to see it fail. It has not failed yet. What do I mean it has not failed? What you want to see is a close below Stevie's red line. That price point is 26.68. That is the price oscillator unchanged line, being the red line. That is referring back to the price oscillator on the bottom portion of my chart. And there is nothing more bearish than a falling price oscillator below zero. It is below zero, but it's not falling. So at this stage, in order for your JDST trade to really get some legs, watch the price point of 26.68. If you get that, what that says is then the next area where you're going to really be watching is this bullish engulfing candle back here on September 22nd. You get below that low out there, and then you probably have an A to B equals CD to the downside. I'm going to try not to sneeze. Excuse me. That didn't work out real well, did it? Hey, better out than in is the expression that I like to use out there. So, why hold it back? So, thank you out there. I will take all the blessings that I can get, 28.70, 28.56. Now, the A to B equals CD to the downside that would keep you inside of that JDST trade would get a pattern in the GDX down to about 21.94 out there. That would set up your Gartley buy pattern. So that was for JDST. Question came up if we would also take a look at Disney. Ticker symbol there is DIS. Now, of course, Disney is perhaps one of my favorite of all favorite companies out there, because I did for many years, owned retail stores at Disney World. You would not even have known it. I had stores with inside their stores out there, or kiosks, really, I should say, with inside their stores. So I was a very fortunate lad, and always kissed the earth each day in having those stores out there. That was a fun time in my life. Now, if we take a look at what Disney is doing right now, hey, let's just take a look at a weekly chart. You'll see what it's doing out here. You can see that it's well off of its highs from a trading week of August the 3rd out here. We're back towards its most recent lows. The most recent lows coming here the week with volume, by the way, of February the 8th. Henry the 8th, I am, but this is February the 8th, a little bit different, and we're trading into that weekly swing point. Now, that weekly swing point has volume of 93 million shares. Is price going to go test that area? Here's how it will go test that area. If we see a weekly close below $92, $92 even. That happens to be the weekly profile out there. So that becomes our horizontal hidden, but not hidden when we take a look at it here at TFNN, but a hidden level of support. So any close below $92, and that says that what we are likely to see is a test of that February 8th low. Now, it was the week that began February 8th, and that low was 86.25 out there. Volume-wise, 4 million shares so far this week. I don't know how to really compare that to weekly volume. We got to take a look at, there we go, with the GATA again. But we should really take a look at that maybe on Thursday or Friday, and see what Disney is doing. On a weekly basis, any close above 93.20 on light volume, less than 93 million shares, you'll have a rejection of a swing point low that had volume. You'll have a test and say a failure to be able to bust out the lows. That would then say Disney could or should bounce up into about the 96.85 level out there. So that's what we see on Disney. If I look off to the left and take a look at any of my other charts, do I see any other patterns out here? There was one. That pattern was that price had been moving lower, doing a less relative energy. Therefore, you can see a little black line on my chart out there. We did get a nice little bull reversal signal. That was on the trading day of September 22nd. But today, we're giving that back. You're trading back below the oscillator and change line at 92.29. It does not look good for Disney. Well, it looks good for it to go down and test that swing point low. And again, that was the price level of about $86.25 out there. So I hope, I hope that assists you with your trade. Let me see if I've got any other requests that have come in out here. The hotline is open, so you can give us a call at 877-927-6648. Any other email request? None that I see. So let's go take a look at, see what we want to take a look at. What do we want to take a look at next? We've covered that. Well, we haven't looked at, let's take a look at light sweet crude. Shoot, that's sitting right out there. We should take a look at light sweet crude. Should we not? We should. So let's go see if we can figure out what it is doing. Probably not much, but I'm just trying to critically pause here while I get the symbol, I should say, as well, up on my other screen. So nonetheless, we're going to get two looks with regard to light sweet crude. Now, we can see right now it looks like it's headed again. I don't even know. This is the weekly chart. Okay, let me put the daily chart up on my screen out here. There we go. 46.41 is the bottom of the swing point. Well, let me turn off the market profiles, and you'll actually see it. Otherwise, it looks like a hodgepodge, and hodgepodges are very difficult to actually see what in the heck is going on. You're wondering, what is he talking about? Here's what I'm talking about, Lewis. We're looking at the swing point low. That's the trading session of September 8th. That low is 45.19. No, actually, I take it. The low is 46.41. Shoot, the number's right in front of me. You think I could actually read out here? I can read. 46.41 is the swing point. It looks to me like that is where light sweet crude is headed to. It was tested the last two trading sessions and rejected. I don't know volume-wise what it was like out there. Is there much going on inside of light sweet crude? Nah, not really. I tell you, light sweet crude has me perplexed. Is that a technical term? Perplexed means I don't have a clue as to what light sweet crude actually wants to do. I don't know if light sweet crude is setting up an A to B equals CD to the upside or an A to B equals CD to the downside. Do you? I do. Yes, it does have PC Peter. It does have an apex. It actually has two different channels that it is traveling within. It's got a rising price channel, in that case represented by the blue lines on my chart, and a descending price channel represented by the red lines. And of course, one of the red, the top, and the blue on the bottom. There you go. As George at my big fat Greek wedding would say, there is your apex of your triangle. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 151, S&P down 17. Gold's up a couple of bucks. As we take a look at Goldilocks, we were talking earlier about light sweet crude, and I'm telling you, I'm a little bit perplexed. I don't recall. I've used several different adjectives to describe my views on light sweet crude, and I don't know which pattern in light sweet crude is actually forming. AB equals CD up, AB equals CD down. And in the case of light sweet crude, much like the case of gold, we're trading with inside a cone of silence out here. Candles, daily candles are small bodies out here, so not a whole lot of conviction. I do believe we'll likely see another spike higher in gold, higher than the high out here from a couple days ago on September 21st. That would be our September 22nd. That would be a logical conclusion, even though it could be filled filled with a lot of illogic, but it's a good logical conclusion. So 1347 to 80. Now, one of the reasons that I say that, and I suspect that we will see gold hold that level, is if I take a look at a 2-hour chart out here, it's got your favorite pattern. I've adopted it as my favorite pattern, which is that we probably will see a spike so that we get a seventh wave move to the upside on this 2-hour time frame out there. So that is what it looks like to me. But then we ought to see gold get contained and maybe even move back down to the bottom of that channel line out here. So that's what's going on with it. Not a whole lot to report on. I see the news coming across my phone inside the den that now Disney is in the game of trying to get Twitter. Nobody wanted Twitter. Now in the last 3 days, everybody wants Twitter out here. So the bidding war is about to it's not about to. It is now underway. And so then the question becomes between Google, between Disney, between who else is it that might be interested in Twitter out here? Where is price likely to head to? In this stage of the game, it's an excellent question. I don't know if we can even figure that out. What we can do is say, hey, you know what? The bigger fool theory. You are right about that, but that bigger fool theory out there, Polar Bear, and I will take it you weren't speaking of me, but you could have been, and I wouldn't even be too offended by it. Not too offended, but I would say that bigger fool theory maybe says 24.94. That would be the next logical spot for this to get bid up to about $24. I just say that because it's a 0.618 retracement from high to low. Why these numbers actually work, I don't know. I just know they do. And that what's his name? Fibonacci. You know that he most of this Fibonacci theory came from, him watching rabbits multiply. And continue to multiply, and voila, there was the Fibonacci theory out there. So I'd have to say 24.94 is probably the next stop for Twitter out there. There's nothing, is there high volume high? Sort of. If I put this on a weekly chart, let's just go see what the weekly chart shows us, if anything really out here. I don't know. Not a lot. Maybe there's $31 in it. Who knows? So, but anyway, the bidding war with inside of Twitter between Google and Disney at this stage of the game. One, a company whose stock, as we took a look at, has kind of been hurt quite a bit. And another, hey, let's take a look at Google. We haven't even looked at Google. G-O-G-O-O-G, what, L? Is that the one? I think there's two of them, right? So you got G-O-G-L, G-O-G. If we take a look at it, which one do you want to look at? Probably just the Goog itself. Is it doing a whole heck of a lot? Pulling back today. Volume, by the way, today is about 876,000 shares, but this was higher with 1.5 million shares just yesterday or Friday and on Thursday. So the retracement here in Google, no big deal. Hey, folks, stay tuned. Enjoy the debate, the food fight. You know how to play this market, right? Hillary does well. Market's going to bounce tomorrow. One-day rate of change, no problem. Trump does well. Forget the one-day rate of change. Market's going to continue headed lower. Steve Rhodes with TFNN. Have a great day, folks. Look forward to seeing you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.